Well, I may only have a couple of videos for you, but I want to start off with something that I keep talking about. It's like my third time now. Canadian company, the mortgage giant that wasn't exactly a bank, but still a lender nonetheless, that has had a massive capital flight. That would be Home Capital Group. It was the guy who was the CEO, but he was also the board member of some other thing that was a pension fund, and he gave the company a loan to the pension fund. And when it first came out, I said, you better pray to God this isn't attached to a pension fund somehow. And then the next day, okay, yes, it was attached to a pension fund. Not through the company directly, but indirectly. And the CEO sits on the board over here. He's also a big-time shareholder over here. I mean, come on. Anyways, the company in question, and this is just, look how fast this can go down. March, April, and then May. And these are millions, right? Millions, so 2,000 million, which was about $1 billion or so. And that's Canadian dollars. Not looking real good, is it? And that was supposed to fix it. Pensioners, don't worry, we're good. So they said. Canada, this is Zero Hedge. Canada hasn't seen a bank run such as this in decades. Finance Minister says home capital bailout is now possible. I thought the days of bailouts, someone correct me if I'm wrong, were the days of bailouts not gone now? We only had to do it one time, recovery, Canada did it, US did it, friends across the pond in the Eurozone did it. Just a one-off. Just a one-off. When we first said 3 weeks ago that the spectacular sudden implosion of Canada's largest alt lender, Home Capital Group, or HCG, whose fate we had followed closely since 2015, was Canada's own new century moment, the parallels were more than just the obvious. Like in the U.S., it took the market nearly a year to realize the full implications of the subprime collapse, which first manifested in the failure of New Century and its subprime lender peers. When all was said and done, the world's central banks had to pump, and still do by the way, trillions into the financial system to stop it from disintegrating. Slowly but surely, Canada is starting to appreciate just how serious the home capital failure is, and how the unprecedented bank run that has now led to 94% of retail deposits fleeing the troubled lender is just the first step of what will likely be a very painful process, which will likely culminate with either a government bailout or a financial system on the verge of panic. Looking at that chart, I think the financial system over there might already be on the verge of panic based off of the sheer number of withdrawals, deposits taken out of there. Today, the Globe and Mail has published an in-depth report putting the HCG pieces together, or as the G&M puts it itself, the dramatic story of a financial institution's near collapse. How quickly can a financial institution go from seemingly healthy and completely solvent to being on the verge of liquidation? And the answer is just mere hours. Here's the background. It was late in the evening on Sunday, April 30th, when lawyers working for Home Capital Group, Inc. dialed into a call with lawyers representing the company's new lending syndicate. The troubled mortgage lender had negotiated a $2 billion credit line just days earlier. Emergency money the board felt was needed to survive after a high-profile run on deposits at subsidiary Home Trust. The company planned to draw down the first $1 billion from it the next morning, May 1st. But the deal was getting bogged down in a last-minute dispute over details of the funding, according to two sources familiar with the talks. As the conversation proceeded late on Sunday, it became increasingly evident that the fate of the financing was hanging in the balance. Another call at 2 a.m. on Monday ended badly with no agreement, a source said. There was no room for error. Home Capital was hours from the start of its business day, and it was critically low on capital. The board had determined the company could not open its doors for business Monday morning without the financing in place, the sources said. As the dispute continued, officials from Canada's banking regulator, the Office of the Superintendent of Financial Institutions, or OSFI, were on standby to launch a process to take control of the company Monday, a move that would have almost certainly forced some form of wind-up of Home Capital's business, the sources said. In the end, sometime prior to 7 a.m., the lawyers hammered out a deal on final terms of the loan, allowing the first $1 billion to be transferred Monday. When business started a couple of hours later, only a small circle of exhausted insiders knew how close the company had come to collapse. And here's part of the issue. As Zero Hedge correctly found a year before this all happened, said, but the seeds of failure had already been planted years ago. Roughly around the time, and they posted a link to their article, we first noticed HCG and accused it of issuing liar loans. It took regulators 2 years to catch up to Zero Hedge. The first alert about the OSC case, for example, emerged late on a Friday afternoon on February 10th, when many had already left for the weekend. Home Capital Group issued a 2-paragraph release revealing it had received an enforcement notice from the OSC relating to disclosures in 2014 and 2015 about an internal investigation that found information on some loan applicants had been falsified, aka liar loans, leading to suspicions of 45 mortgage brokers. Hold on. Yeah, so that led to, as I said, that investigation led to the suspensions of 45 mortgage brokers. How much business did those 45 brokers? Are they specific individuals or 45 mortgage brokering companies with individuals? So 45 separate entities with multiple employees each producing new liar loans. Garbage. And as I said when I first heard this story too, I said, what are the chances, what do you think the chances are that there's just one or two other companies like HCG that had the same type of people, 45 mortgage brokers? What other companies use those guys? There could be dozens. There could be a ton of them using the same group who produce the same liar loans. And they're liar loans for a reason. The person we want to put into this house, who's come to us, applied for a mortgage, should never, based off of the information we know about them, should never be allowed to buy anything on credit the rest of their lives. That's the kind of information we've discovered. But we don't make no money turning away potential business like that. And I don't know about you guys, but we're only human too. I'm pretending to be one of the 45. We're only human too, and we need money too. And we have a great, fantastic commission comp here. And if we can close these, we get good money. And if we can close a bunch of them per week, per month, and our quarterly numbers look great, vacations and extra money, it's beautiful. We love our job. So we got to make sure we approve. Everybody and their mother and their dog. Give me anything and we'll push it through. This is the same thing the credit rating agencies did in 2008, 7, 2006, 2005, etc. All these mortgages, AAA. Mortgage-backed securities bundled together, AAA. And they were never AAA. They were garbage wrapped around a facade of AAA. In other words, a few little AAA mortgages were piled in there, but the bulk of it was a stinking, rotting pile of subprime garbage that is absolutely going to be defaulting and foreclosed on. But again, we can't sell that to investors. We need to say AAA, so we need the help of the rating agencies, and they did give us the AAA we needed. And then we had a bailout happen in 2008, 700 trillion, 800 trillion, billion TARP fund. Trillions were printed, given to the banks. You know the story. And all that's supposed to be old news. It's gone. We learned our lesson. The banks learned their lesson. But they didn't. They gambled even more. The commissions are even higher. There's more at stake. And what took these people 2 years to find, Zero Hedge nailed immediately. This isn't looking good. It's looking like some liar loans are coming up there in Canada. Oh, it's a conspiracy of Zero Hedge. Who the hell is Zero Hedge? What is Zero Hedge? Bunch of idiots. They don't know anything. Oh, wait, but there's his link. There's his link. When was this posted? 2015. July 30th. July 30th, 2015. Here's the title, by the way. Liar loans pop up in Canada's magnificent housing bubble. So the bubble was already still being inflated. The bubble was still growing in 2015. Then 2016 came and it got worse. And then 2017 is here now. Well, no, we're 5 months into it now. And I can't get away from the amount of mortgage and real estate related stuff if I tried to, which is not surprising that this company is back in our face again. And the fact that it's not only a housing bubble, as he talked about in 2015, it's beyond bubble territory. Oh, but it's the Chinese coming in, they're buying up everything in Vancouver and everywhere else. Okay, and I get it, I do get it. But is it possible, that everybody's approved? Therefore, mortgages and everything's just high and rent's high everywhere, which is actually true if you look around. Everybody's approved again. Same thing. Why? Because businesses can't continue to stay alive if they don't get people into these mortgages, into some kind of loan, whether it be a credit card, whether it be a car loan, any loan. It is someone's responsibility to bring in business to this financial company. And we got to get paid, and I got a family, and I got my own mortgage that's very high, and I got my own rent payment that's very high. So I got to make sure I get my bills paid. And I know, honestly, I have a guideline here, and I know 100% sure you don't qualify for this house, and you over there certainly don't qualify for this car. And I'll tell you, when we got back from Tennessee in 2013, I went there the beginning of 2013, left by 3/4 of the way through 2013 to come back around August or September. Came back to Florida, got my same old job back. I was kind of working online at night for them anyways, doing some database stuff. Got back, my wife Evelyn, let's get you a van. Found another one that, again, it's 2013, but it was a 2005 van, really low miles. Happened to be at a dealership, saw it online. Well, let's go down to the dealership. Sure enough, it's there. We drove it. You know what? I'm happy with it. It looks good. Runs good. Everything on this thing looks good. Low mileage, right? So we get it. She does not have a job at all. I'd already stopped paying my mortgage years ago, so I knew what my credit was like, as I've told that story many times. And they basically told us right while we sat there, how much do you make a year? I make this much. But she's getting the car in her name, right? Yeah, because, she's like, yeah, we know. She's got the great credit. Yes. So we're going to put in her name. How much do you make? I make such and such. Okay. Ma'am, just write that down there. Okay. And she did. Oh, here's your car. Okay. Here's your keys. Here's your car. Have a nice day. That was a dealership, by the way. I'm talking about a major dealership. Like, I think it might have been a Kia. Not some, Joe Schmo on the side, backroom deal dude. No, a real dealership with real brand new cars for the, Kia. I think it was Kia. And of course, they have trade-ins, so they do have a used car department, and that's what we got. It was a used van. And I remember that. Wow, that was almost hard. Not just kidding. That was foolproof. Just say what you make and sign it. Because your credit's good is all we care about. Your credit is good. So you can say anything, and we need you to make sure you say it, and your husband's salary is fine, so just put that down. And we got the car, no sweat. No sweat. So our entire financial system, everything that's borrowed, car loans, houses, all of it, there's a massive amount of people who, what I just described in there too. For sure the cars, because I just described the same thing with my car, or my wife's ex car. It's not even the one we have now. It was the one before this one. And by the way, even then, how the hell did she get this brand new 2015? I can't even remember that. I remember the other one, but I don't remember this one. How the hell did she get that car? She doesn't work, and there was nothing put in her name. It's not my name. It's in her name. I think somehow, again, through her credit, we don't even need to look. Your credit's so good, we don't even need to look. Just sign here. I think that's how that one went. Can't even remember. So that's, one way or the other, that's two in a row. Because if you don't have a job, it doesn't matter what your credit is. If you don't have a job, you can't go and just get a car. I mean, you just can't. But we did. That's two in a row. So how many others are out there, right? And then again, same with the housing. How many houses are in the same situation? They never could have afforded the house. but someone needed to make their commission, and they gave it to the bank. This is a good person. You package it and bundle it up with your mortgage-backed securities. This is a good one here, sir. You know us. We give you only the good stuff. Yeah. Good, guys. Good, thanks. When in reality, they're giving you the bad stuff. And as this little audit found out, 45 different brokers were creating liar loans. That's 45 completely different entities creating liar loans to be pushed in. So out of those 45, how many of them gave other banks the same crap? And not even the 45, other ones that maybe don't work with the banks that they work with or mortgage entities that they work with, but work with some other ones, were doing the same thing. This is systemic. It is all-encompassing, and it's not just Canada. It's absolutely Canada, but it's absolutely in the U.S. too. And there's some bank or mortgage entity somewhere that is exactly where this place was 2 years ago. That Zero Hedge said, guys, we see some liar loans here from this company. They called them out by name. And then all of a sudden, 2 years later, the regulators finally figured it out and did a little audit and said, oh boy, we got a problem here. Cannot believe the same company, the same one. Canada hasn't seen such a bank run such as this in decades. Finance Minister says home capital bailout is possible. What an unbelievable story. I mean, this is just, if there's any other day and age, I'd say it's an unbelievable story. Now, this is not unbelievable at all. This is so believable. It's the norm. It's the new norm. It is the new norm. Fraud, corruption, wrongdoing, lying, you name it. That's what the entire system is based upon. Worldwide. Not U.S. only. Not those damn Canadians up there. The damn Canadians, like on South Park, their only part of their mouth that moves is the bottom jaw. Those damn Canadians. Nope. It's not the damn Canadians. Not at all. It's the damn everywhere. Money. I need paycheck. I want to get a bigger house. I want to get a bigger car. I need a jet ski. I need to just sell, baby. I don't care about their credit. I need my money. Give me my money. And it's good. Again, it's great up front until a little audit's done here, a little audit's done there. Oh my gosh, we've got liar loans of epic proportions on our hands, which caused this large company to practically become insolvent, again, within mere hours. Bankrupt, insolvent, done, finished, collapsed. Until this, stroke of midnight deal's done to pull in $2 billion of help from another company. The guy who sits on as CEO sits on the board, he's on one and the other. Well, that's not a conflict of interest, not at all. And now that that's done, the deposits have pretty much completely left the company. So now what about that $2 billion? Now what? I just read it. Finance Minister of Canada says home capital bailout is possible. And my Magic 8 Ball is not on my table at the moment, but I don't even need it. Trust me, I don't even kind of need it. This company is going to be either A, bailed out, or it's going to completely collapse. And you know how the banksters roll and the governments roll. We don't want no bankers collapsing. We're going to bail them out. And the taxpayers going to be told, well, you're bailing them out. Of course, we're the government. We get our money from you. And I know you're upset because 45 of the brokers were creating these liar loans in the first place, which put the entire country at risk, which put the entire taxpayer base at risk, which is now coming true. The risk is here, and now you've got to pay for it. So they got their commissions, life was good, the whole damn thing collapsed, and the taxpayer, here's the tab, pay the tab. Well, these guys maybe made millions, commissions, who knows what they made, these brokers. But they're gone. Are you going to go after them? I mean, yeah, answer should be yes. Yeah, every one of them that broke the law, because again, this is very simple math, and did you do due diligence here? Did you check that? The job site? No. You can't answer yes because you already know the answer is no. So the answer is going to be no, we didn't. We created liar loans because we needed paychecks. And that's the only reason why we did it. So a few people, potentially, several, 45 is quite a bit. And again, if that's 45 companies times the employees, or is it just 45 employees spread out? I don't know. Nonetheless, it's not a whole lot of people to say you just caused a $2 billion collapse of a company. Had you done the right thing, this wouldn't be happening right now. But since you did the wrong thing, don't worry about it. Keep your paychecks, keep all the commission you made, keep your house, keep your new car, keep your jet ski, keep your boat, keep all that stuff, and continue working where you work. Taxpayers got this one. It's on the house. Don't worry about it. Nothing will happen to you guys. Taxpayers got this. That is how this is going to go down. Take care.